So multifamily investing keeps getting more and more attractive. Well, how is that? Investors are getting spooked because interest rates keep rising. And the confused mind, you may relate with this, will say, I don't want to take action or I'm going to wait. But the challenge is that if you are waiting, and inflation is not 9.1% as they officially say, it's more like 15 to 18% or higher, you could be losing 40% of your wealth over the next 2 years just due to inflation. So multifamily investing keeps getting more attractive in the face of imminent recession, high inflation, and a fear-based environment. Warren Buffett has this great quote. He says, be greedy when others are fearful and be fearful when others are greedy. So when there's fear, there's a great opportunity to make a lot of money. So we're gonna go over this in 3 easy steps. I've got a great quote for you at the end. I think you're really gonna enjoy it. Okay, so as we jump in here, so inflation has become a big issue, right? It's a big issue for a lot of people. So just sitting and holding and waiting, it is going to penalize you. It's a huge, huge premium to hold or to just hold cash. So really the answer to this is to buy assets that pay you to hold them. Multifamily investments such as this one right here that we do, self-storage, our ATM machine fund where we partner with a large ATM operator. And there's other cash flowing assets as well, but they're great assets that have a built-in inflation hedge. Now, it's different than bonds and stocks. Bonds and stocks do not have, in my opinion, an inflation hedge. Even people would say, well, as money creation and inflation rises, stocks will go up. Yes, but if you look historically, in the 70s, as well as in hyperinflation in Germany, it did not keep up with the pace of inflation. So they are different. My friend George Gammon says this. There's this video we did about the 10-80-10 rule. But basically, he talks about this. He basically says, this is a good allocation formula. And again, not specifically for any specific advice, but this is a lot of what I do is 80%, 10% of your money would be in physical gold. That is, that's insurance against inflation so that you still have purchasing power. 80% in cash flowing assets that pay you to hold them. And then 10% in speculative things. Maybe it's crypto, maybe it's gold mining stocks, maybe there's other stocks or things you like, or 10 or maybe venture capital, that type of stuff. So you can put that in there. But investments that pay you to hold them and other sorts of things. So there's a lot of things that you can do that give you the opportunity to really grow your wealth over time without having the high risk that happens in inflation. We're going to talk about multifamily and why that is such a strong case within multifamily. Okay, so the second reason why multifamily is so attractive, in my opinion, is that multifamily rents are rising. If you look kind of at this image here, this is a deal we did in October of 21, and it shows, the average rent in Jacksonville at the time was $1,320. A few months later, in May of 22, it was $1,460, and then in August, just 2-3 months after that, it was $1,566. So that's an increase in rents of 19% in only 10 months. So why is this happening? Why are rents just going crazy? Well, the reason why is that the government, because of COVID, they created all of this new money. You can see on the chart here, especially on the right side here, it's a 40.9% increase over a 2-year period. So that means that all the money in bank accounts or physical cash increased by almost 41% over a 2-year period. Insane, right? Let's just throw a bunch of money out there. And that's what they did. So rents and other things are just going to start costing a lot more. So that's why I think real assets that pay you to hold them, such as multifamily investing, becomes so much more attractive. So the value add approach also gives safety to a deal. Now what I mean by this, I'm going to give an example. So this is a deal we did this last summer, and basically current rents $1,000. We're doing a $6,000 a month, or $6,000 a month, $6,000 per unit upgrade, and basically flooring, kitchens, bathrooms, just some basic appliance, that kind of stuff. Nothing really fancy. But what it's allowed for is that average rents, just to get the average rents in Jacksonville, of $1,566 a month, which is a 57% upside in the rents, which is insane, right? The fact you started at $1,000, you put a small amount in, and now you have $1,566, that's really crazy. So this value add approach versus buying brand new Class A stuff. I'm a big fan of value add because you're buying older stuff, you're making it better. If you're buying newer things, you don't get this sort of downside protection, right? Value add protects you from rising interest rates, protects you from decreasing valuations, unforeseen economic risks, and rising costs due to inflation. We're actually buying below replacement costs. This particular building we bought for about $165,000 per unit, and the going cost to replace them is around $190,000 to $200,000 or more, right? Costs are just keep going up. So those are reasons why rents are rising. And the value of multifamily is based on how much rent is coming in. So huge advantage. And of course, there's a great hedge of inflation there. So the last thing I want to say is that we are still short millions of housing units. And there's a debate going on how many units it actually is. This study here says it's 5 million. Another one from the Association of Realtors says 6.8 million. Another one says 3.8 million. Whatever it is, it's a lot. We're short millions and millions of housing units. There's not enough places for people to live, particularly in growing markets. So supply is low, demand is high, and rents keep pace with inflation. So as you look at this chart here from Mother Jones, the magazine, reputable magazine, they basically show that rents and inflation are almost hand in hand, and rents lag slightly, but they basically follow a trend line. So as they continue to print money, we know that rents are going to continue to rise over the long term. Even if there's some short-term movements, it's going to work out very well for apartments over time. So interest rates are going higher. I believe personally that actually that leads to a higher cost of ownership, which again, your payments go up if you have a loan that people are buying new properties, and it's more that in turn, I think will lead to higher rents because the ownership costs go up. So again, I don't think it's, the interest rates go up and the value of the asset goes down. It's just that the cost of owning it goes up. So then rents go up. So the income for the property goes up. So it's a very unique time right now. I feel like a lot of money is made in times where things are uncertain, right? So you do pay a premium to have a lot of clarity in the short run. But if you know something is going to be great, there's high demand for it over time, it's time to jump in with both feet and really get going for it. So I want to share this quote with you. This is Warren Buffett. He says, "Be fearful when others are greedy, and be greedy when others are fearful." Love that quote, love that guy. And I'm not really a proponent of greed or fear, but it's being aware, right? Being aware of what's going on in the market. So when people are fearful, there could be incredible opportunity. If you'd bought all kinds of real estate back in 2008, 2010, you would have just phenomenally doubled, tripled your money, at least, right? Maybe even much more if you use leverage. So there's a lot of opportunity there. I want to show this video to you if you're interested in learning how to raise money for real estate. I was able to raise $12 million in 12 months. We'd love to share that with you. You can check out that video up here. And if you haven't joined our investment club, you're not hearing about these great deals that we're doing. We'd love to be able to start a relationship with you. We really look at our investors as being partners with us on our deals. So love to have you join that. You can go to our website or click on the link below, bronsonequity.com, click the join button. We'll set a relationship with you and start, have a call with you and start a relationship with you. So anyway, thanks for taking the time to educate yourself, and we'll look forward to seeing you on the next video.